Well, welcome back to You Heard It From a CFP. My name is Matthew Coyle. Today is November 4th, 2021. Thanks for coming back to my office here in Minneapolis. Today we're going to talk about inflation and whether inflation is as big a problem as advertised. In some ways it is, in some ways it isn't. It seems to be the topic du jour these days. So let's talk about inflation and look at some actual data. I hope you like charts because you're about to get your fill. Let's dive in. All right, well, it seems like everybody these days is talking about inflation. Your friends, your neighbors, the guy down the street, the guy who owns the business that you like to frequent. Everybody's costs seem to be going up, but where are they going up and how badly are they going up? Well, to answer that question, there is a website that exists out there, and many of you may not even know it exists. It's a vast database of information that you can easily sort through. It's called the U.S. Bureau of Labor Statistics, and I'll put the address right here. The U.S. Bureau of Labor Statistics tracks virtually every data point under the sun when it comes to prices for producers, consumers, and on down the line. If you are interested in a particular given topic of inflation, chances are it's in the BLS website. So I'm going to share my screen and we'll go over a couple things and just take a look at where inflation is a problem and maybe where it's just kind of mildly annoying. So let's look at it. All right, well, chances are if you find the economy interesting or markets interesting or finance interesting or business in general interesting, you need to check the BLS website. It's a website that a lot of people, like I said, they don't even know it exists, but it is a massive collection of data that you can easily sort through based on 12-month rolling changes, and they have nice graphs you can look at and really in a nice way condense what's going on in the economy and take a look at. So if you're a chart dork like I am, and you like finance or even find it remotely interesting, get to this website and poke around a little bit. It's a very, very interesting site, and a lot of effort goes into collecting this data between the government and the private sector. So let's take a look at it. And what I'll do is I'll share my screen. And what I'm sharing here is the BLS's different categories that they track, things like food, energy, transportation, gasoline, new vehicles, shelter, all sorts of things that they track as far as 12-month changes in price. What I've done is brought up and just used the all items, which is the average, which is kind of we'll use that as a baseline. And you can see going back all the way to September 2001, the kind of range that we've been anywhere from kind of 6% annualized inflation on the high side down to negative 2% on the low end. And you can see across all items we are a little over 5% change. 12-month change or year-over-year change, which historically is on the high side. Most of the time in our financial plans, we will model anywhere from 2.5%, maybe 2.25% inflation. We typically would not model 5 or 5.5, but 2 to 2.5 for most financial planners is pretty common. So right now we're trending across all sectors, average about 5 to 5.5, which historically is certainly not runaway inflation or hyperinflation like some people have irresponsibly talked about on the news media, but certainly on the higher end historically. Now, how does this compare within sectors? Because this is interesting, but it doesn't tell us all that much because it's an average of all sectors. So let's take a look comparing all items as our baseline, and we'll look at food at home, for example. Now, food at home, which of course is the black line here, is actually trending less than the overall average. I realize everybody spends on things a little bit differently. Some people buy more food than others. Some people spend more money on transportation if you live in a bigger city. Maybe not as much now, but definitely food and food at home has not trended as high inflation-wise year over year as the economy in general. So if you're trying to eliminate one thing that's not driving the huge increases in price some people are seeing, it's not probably going to be food. You can also compare food in general and food away from home, which are separate items that they track in this. And all of them are trending right around the same that you would see nationwide on average. So food and food away from home, food at home, probably not what's going to cause that inflation to be a problem. So let's look at medical care and medical care commodities. They're actually two separate things. Commodities would be the supplies that a hospital would buy, and the medical care services itself are the delivery of the care. So two separate costs. Both are not trending anywhere near the 12-month year-over-year changes in the economy. In fact, medical care commodities, probably because we're producing so much of it now, is actually trending down in cost last 12 months, 12 year over year. So if you look at these two compared to the overall items, certainly medical care delivery and medical care services are not driving the majority of costs that you're seeing in the economy, so we can kind of eliminate that. Shelter. Shelter can be defined mostly as rent Rent has increased, and I know that's more of a regional thing, but that about roughly anywhere from 3 to 3.5% inflation year over year, not including the cost of housing. That's a big omission there, so that can be very regional. We can't take much from that either. Now, if you look specifically at energy and transportation, the picture gets a little different. If I pull up energy, there's a big one right there. Energy up 25% year over year when you look at 12-month year over year change compared to the average, which is about, again, 5 to 5.5, somewhere in there. And the theme repeats itself when we get to things like gasoline. Gasoline up enormously, probably because we just haven't been producing as much of it as we could. Our capacity is down, but 40 to 42%, somewhere in their year-over-year change. It's actually higher than that in some markets. I can tell you in our home city of Minneapolis here, it's a little bit less than that, but I know markets around the country are different. So gasoline, natural gas. If we take natural gas, we have a roughly 20% year-over-year change there. So this obviously is transportation. Here's new vehicles. That's roughly about 8 to, it's probably closer to 10 by now. But if you tried to buy a used vehicle or a new vehicle, you know exactly that the prices are going up because of a number of reasons, shortages, delivery costs, things like that. So if we look at transportation, gasoline, energy, electricity, most of those categories are trending higher than the average economy, or average rise prices in the economy. So it seems to be localized mainly in those categories with regional differences in things like housing, rent. So very interesting. And if you find that kind of information interesting, you can compare a number of other sectors here on the website as well if you dive in a little bit. Okay, well, now that we know what sectors are contributing to inflation more than others, and of course they don't all contribute the same as we've seen, what should you do? What do most people do in times like this? Well, there's a couple different things that people do. People typically hold more cash during times of inflation, and we've seen this, commercial bank deposits, and I'll put this on the screen. Commercial bank deposits just at an all-time record, which you would expect to see during times of inflation. Money market funds are also at an all-time record. $5 trillion in money market funds of all types we see now in the market. And of course, depository institutions themselves, partially due because they're required to do so, but also because their costs are going up, they're holding more cash as well. So across the spectrum, regardless of who's reporting the data, the theme is emerging that inflation tends to be a little bit focused in logistics, moving things around, energy, transportation, auto, both new and used. Anything related in that space is really driving what you're seeing in inflation. All costs are up a bit, but not quite as much as advertised as you may suspect from some of the headlines you see. And if you're worried about it, keep your bond market holdings short to intermediate term. Reevaluate your market holdings every so often. Have a planner look at them, an investment manager look at them, and maybe focus on companies that can pass that through and survive a little bit better. So, I hope you found this very interesting. Thanks again for tuning in, and I will see you next week on a different topic. Take care. Thanks.